And Intuitive Surgical announced after the bell. Looks like the market really liked what they had to say. Intuitive Surgical, let me read this here, develops, manufactures products that enable physicians and healthcare providers to enhance the quality and access to minimally invasive care in the United States. So they have, I think, a device that makes small incisions and then they can do surgeries on people, which is pretty impressive. So it's a combination of tech along with healthcare. And the industry they're put into is healthcare, medical instruments, and supplies. Over the 5-year, they've done nicely, 168%. And they did have a nice pullback that started in 2021 and ended in 2022. A lot of the market had big pullbacks, but they've had a couple of other pullbacks along the way. But for the last year, it looks like the stock really worked, up 72%, and then they're up another 5.73% in after hours trading. It is a big cap, 168 billion, and revenue is 7.87 billion. They are profitable. They have a high PE of 76, and then forward PE is 64. Analysts think it's a good stock, but it is priced at a premium, a slight premium, and then after tonight's price increase, it'll probably be a higher premium. So I've never really looked at Intuitive Surgical. Let's take a closer look from an income growth perspective. So their growth in revenue has gone up 31% in 2021. Of course, surgeries went down in 2020 because of COVID. And then 22, they had good growth rate. They had good growth in 23. So very good growth, very nice, stable upward chart. Pretty much right there with Netflix. Netflix was growing at like 15%. So very good. Their gross profit is really attractive. See, their cost of revenue is about 33% of their top line. And it leaves about 66% in gross profit. That's the sign of a valuable company. That's why their market cap is where it's at. Cash flow, see how they cash flow. So they've been cash flow positive for years. One little concern I have is cash flows are dropping. From 22 to 23, they dropped. So that is an item of concern. Got to understand why it's dropping. Looks like non-operating activities is one of the main reasons. Inventory, they're building up inventory. So I wonder why they're building up inventory. Their products, I imagine, are not perishable. They could be, put on the shelf for 6 months, 12 months. It shouldn't spoil or anything, right? It's instruments. They should be able to be okay on the shelf. So hopefully they recover that, but that's a pretty good rise in inventory. And that's what's causing the negative cash flow to appear, or I should say, the amount of cash flow from year to year, it's gone down. It's still positive, but it's gone down from year to year. Okay, so based on that cash flow figure, let's say it was a 750. I mean, I cannot get close to the valuation of this company. The best I can do is like 20 to 40 billion, and they're way up there. They just don't generate a lot of cash. I would need them to generate about $8 billion to $12 billion of free cash flow per year. And was I looking at the data correctly? Yeah, I was looking at it correctly. So per year, they generate less than $1 billion of free cash flow. That's not very good cash flow at all. Interesting. So their valuation is probably based mostly on earnings per share. 22 analysts cover this company, and they do agree that it's either fairly priced or priced at a small premium. Right now, it's at a premium 1.52%. But if this increase holds tonight, it's going to go up. The premium will be higher. And some analysts are pretty pessimistic. They're way down at 318. The most optimistic analyst is at 575. So that's based on their price targets, and their price targets are pegged on their earnings per share. Earnings per share looks pretty decent, and they're going to grow quite nicely in the next couple of years. But this company here it just doesn't generate enough cash. I don't see companies that lack cash really go up to that mega cap level. These guys are already a big cap at their current valuation. They're successful. They keep selling the product. I agree. But it'd be nice for them to keep more of that profit in the form of cash. They don't pay a dividend, very high PE. So this one would be a pass for me, but a very interesting company. And congratulations to stockholders that own the stock, because it's going up today and it's gone up nicely over the past year. Actually, become a paid member of the community. You can get really nice perks. Specifically, we're going to have our first workshop meeting this Saturday where we're going to get together, and it's going to be on a Google Meets call so we can talk through a valuation, talk through analyzing financials, and getting into valuations of companies in order to analyze companies that we are interested in. That's an example of one of the perks, as well as the investor call on Sundays that you would be invited to. So take a look. It'd be great to have you as a member, and there's details on the stream description that you can take a look at. So with that,